Welcome, future millionaires. Today, we're talking about the 5 tax deductions for LLC owners. And these deductions are going to help you save money on taxes. So you want to write these down. I also want to make sure you grab some paper, pen, so you can take notes on this valuable information. And I want you to comment below if you have any questions. In the meantime, I also want you to take a moment to give this video a thumbs up and subscribe so you don't miss out on any of this wealth building information. So now let's get after it. What are tax deductions? There's so much confusion as to what a tax deduction is. So I'm going to break it down for you really simple. Let's say that you make $100,000 in income coming into your business. Total sales, total revenue, all the money that flows into your account. When you have a tax deduction, that tax deduction lowers the amount of net income that you're gonna have to pay tax on. So let's say we made $100,000 for the year and you had expenses that were $20,000. You're gonna subtract that 20 from the 100 and end up with $80,000 worth of taxable income. So tax deductions are beneficial to you. And when you strategically set your tax deductions up, you can really minimize tax and put more cash in your pocket. As a business owner, you always want to think about your profit. One of the best tax deductions are startup costs. When you are first starting your business, we know we're out there robbing Peter from Paul, robbing Paul to get to Peter. We are trying to figure it out. And you may have incurred costs last year or the year before that, But here's the deal. You can deduct in the current year $5,000 worth of startup costs. But what if you had more startup costs than the $5,000? You can amortize the remainder over time. Karla, what does that mean? That means, let's say I had $20,000 worth of startup costs prior to starting my business. I incurred some last year, in the prior year, and so forth. In my current year, I can write off $5,000, but that $15,000, I can write off over 60 months. I can't take it all, but I won't lose it either. That is why it's so important that you understand what startup costs are and that you get all of that documentation together so you don't miss out on any of those great tax deductions. Using your home for business is really a major tax deduction. Many of us may be doing a side hustle. Maybe we're just starting our business and we don't have a brick and mortar location. It's okay that you don't have a brick and mortar location, but if you are using your home for business, you want to make sure you get that write-off. And the way that you get that write-off is that you have to use that area exclusively for the use of your business. That means that if you're using a bedroom, you can't have a bed in there that you're sleeping in. You can't have a closet that you're putting clothes in. You can have a closet that you're putting equipment in, and you can have a bed that maybe you're putting some of your stuff down on, or you're sitting on to meet with your prospective clients, but you cannot use that particular location for your personal usage. Now, when you're writing off your home for business, there's 2 ways you can do that. You can use the simplified method, where you're going to take $5 times the square footage of your business office only at a maximum square footage of $300, or you can use the actual square footage of your office over the total square footage of your home. So if you're in a 200 square foot office and your home is 2,000 square feet, then you're going to be able to use 10% of all of your home expenses. I'm talking about electricity, I'm talking about insurance, I'm talking about your rent payment, and anything else that you pay to occupy that home. Make sure you get your home office deduction. And here's a tip. Even if in your current year, your home is office deduction puts your business at a loss, or maybe your business is running at a loss, still capture your home office expenses, because when your business gets the profit, you can carry forward those home office deductions. So you don't want to miss out on that opportunity of your home office deduction. Vehicle deductions also need to be looked at. even if you're working from home, even if your business is not necessarily needs a vehicle all the time. Some of you may be operating as Uber drivers and things of that nature, or delivery drivers, right? You use your vehicle all the time. But what if you are an accountant like me? I use my vehicle in my business. I have to go to the bank. I go see clients. I drop off documents. There's a lot of reasons why I'm using my vehicle for business. So you want to use your vehicle too and capture that. And there's two ways that you get that write-off. The first way is to take the standard mileage deduction. That means you're tracking your miles that you use for business. You're documenting. And then at the end of the year, you're going to take those business miles times the standard mileage rate, which you're going to find at irs.gov because it changes every year, sometimes in the middle of the year. And you're going to use that when you want to use the standard mileage rate. Or you can take actual expenses that you incur for the utilization of your vehicle. That's going to be the interest on your car payment if you're not leasing. If you're leasing, it's going to be your lease payment, your gas, your repair, your car washes, all of those things. And what you're going to do, track your miles, all miles of your vehicle, track your business miles, and then you're going to take the percentage of business miles to total miles and apply that to your actual expenses. Either way, you're going to write off your vehicle expenses. That's the key takeaway. Make sure that you track it and document it. Every business needs equipment. I don't know one business that can function today without utilizing some type of equipment. For example, a laptop, a camera. If you're on social media, you're using a camera. I know you guys have an iPhone. And if you have a Samsung, I'm sorry. Anyway, I want to make sure that you're getting all of your tax deductions for your equipment, for your printers and things like that. And if you happen to buy equipment that is a big piece of your business, some of you have machinery. You can take a Section 179 deduction where you can write that equipment off all in the same tax year. It's just important to understand that your equipment is a tax write-off. And it's also important to understand you may just place that equipment in service. You may have already had it. You may have already had a desk, a chair, a computer, but you decide you're going to place it in service in the current tax year. Whichever way you do it, make sure you document it and take pictures of it so you can get your tax write-off to save you money and put more cash in your pocket. As an LLC owner, remember, you are self-employed. I don't care if you're just working that business for an hour a week or if it's your full-time gig. You are self-employed. That means that you have to self-insure yourself when it comes to health insurance. So just remember, if you're paying for health insurance out of your pocket, as a business owner, you can take a self-employed health insurance deduction. And even if you put your family on payroll, you can get a deduction for them too. You want to make sure as an LLC owner, you're getting all of these business deductions to help you reduce your taxes. So you want to make sure that you understand what a tax deduction is. You want to take advantage of your startup costs. You want to take advantage of your home office. You want to take advantage of your machinery and equipment. You want to take advantage of your vehicle expenses. And you also want to take advantage of that self-employed health insurance deduction. Those are your basics, but make sure you track everything so that you can get the benefits of being an LLC owner. And when you know better, come on now, you got to do better. So you're going to make sure that you're tracking everything, and you're also going to make sure that you tell your friends about this video. I'm gonna need you to like, comment, and subscribe because I don't want you to miss out on any of this wealth building information. Now go get after it.